Good morning. This is the Bitcoin morning brief. I am videoing you from the beach. We'll give it a little preview. Okay, that was my attempt. Here with Jimmy Song again today and Tone Vase. We're actually going to be talking about Jimmy's article. It's going to be great. Tone, how's it going?
Good, good. I'm still in Toronto. The conference was a pretty good day yesterday. A lot of after parties, so came home a little late. Those that were there will remember, I hope. But yeah, another day today. Let's see what's going on.
That's great. Jimmy, how'd it go yesterday? I saw a lot of women in that picture.
Well, it was 2 days ago, but yeah, it was great. We trained 33 devs, 30, it might have been 34 actually, but it was really good. We had the most number of women. I want to trigger Chris DeRose by telling everybody that a lot of them got scholarships, and guess what? They did really well. So yeah, there you go.
That's awesome. And you're speaking today?
I am speaking at Block DevCon later today. Yes.
That's fantastic. All right, well, let's go into your story. Oh, wait, hold on. Here we go. I have my notes up. All right, is that showing it?
Yep.
There we go. Okay, so Jimmy, I'm gonna let you start off with this one. I thought it was a great overview of the book. My first question to start is just what stood out to you as being the most important?
Well, I mean, I understood a lot of the Bitcoin part. So for me, the more interesting part was the history of money and all of the different ways in which, all of the properties that money actually needs for it to be actually useful. And one of the things that he points out is you need a really good stock to flow ratio. There needs to be a large amount in existence compared to how much you can sort of create more of. And, just like describing it, it's all very logical and it makes a lot of sense. It's just stuff that you might not have thought about if you aren't an economist like he is, that's been thinking about this for many years. Anyway, I pointed out a few things that I thought were very relevant to Bitcoin, and I sort of built my article around that. Inflation and time preference are extremely correlated. And you can sort of, because if you have very high inflation, then that's going to cause you not to plan as much or to accumulate capital to invest in things, and that was a very big one. I had some other stuff in there. It's really early in the morning, so I can't quite remember what they are. Sometimes I have to read my own articles because I can't remember what I wrote.
Absolutely. Tone, to this point where we're at in inflation and talking about time value of money regarding economics, this should increase the marginal propensity to consume. So I'll let you jump in right here. As Jimmy said, they won't be saving for tomorrow, starting businesses or building large scale projects, as they will all require a lot of planning. But do you want to speak to, again, inflation factors, as we often get inflationary questions to you on your show?
Yeah, I'm actually looking forward to reading the book and then discussing it with Saifedean. But I almost want to discuss it with him now, but it won't be fair until I read the book. It's like the way you describe it, Jimmy. I think way too much emphasis is being put on inflation being bad. I mean, we all agree that inflation is not good, especially like 2% inflation, because after like 50 years, it starts to get really, really weird. And the US has been doing it for almost 100 years. So it's starting to get bad now. But honestly, inflation in America or the first world in general, it's not noticeable on a year-to-year scale. Like there's almost nothing that you paid for last year that is all that different than what you're paying for this year. Like
I don't know, Tone. I don't know if you do a lot of shopping at Costco and stuff, but I mean, even like from 15 years ago, like you look at like the prices of fish or something like that, and it's like gone from like $18 a pound to like 35.
Well, again, you're using
milk has gone from like $2 to like $4.
You're using a 15-year time frame, and I specifically said year to year.
Right. But it's not 2%
I
though.
agree.
Like over 15 years, that should only be like 40%, not like 100%.
Well, I mean, I'd like to test those numbers. I think it's a little smaller than that. Look, on a 15, 20-year time scale, sure, things are more expensive, but on a year to year, they're really not that different. So, which is a bit of
so safety goes through like how much of a money supply increase there is, and that's different than like purchasing power, obviously. But those statistics are very different. It's not 2% at all. It's more like 7%, which is significantly higher than what's reported. And I think that jives with sort of like like non-manipulated government metrics, and much more towards like what's been happening in the real world. But regardless, inflation might not be detectable on a day-to-day basis here like it is in Venezuela, but
right.
But over even like 4 or 5 years, I think it's very noticeable, and you could certainly see it in housing prices, certainly see it in stock prices, certainly see it in sort of a lot of assets. But I mean, regardless, that's only one point of the book. One of the points of the book. It's a very thorough book as far as like monetary history is concerned. And one of the big problems that Safedine has with central banking is that you're trying to you're trying to manage something that really ought not to be managed, and there's a lot of reasons for that, but that's only one of them.
Yeah, no, and it's going to be interesting. I mean, Bitcoin's finite supply of Bitcoins. It's going to be interesting how it works out in about 10 to 15 years, because the world has always moved into inflation, like always. And let's see if Bitcoin can not do that. And it will be interesting if it can stick around as Bitcoin, because remember, having Litecoin around is inflation on Bitcoin.
I don't know. I don't know if that's true.
Yeah. What was interesting to me about this, just at least coming from a development economist perspective, is that inflation does have certain positive benefits. Definitely, I see his argument here, but you can inflate away debt sometimes in borrowers, which obviously we're in an interesting bad debt situation. They can repay their debts with money that is right now worth less than when they borrowed it. Although in contrast, right, unexpected inflation often just only benefits companies, and they, because of higher prices, and we're not seeing so much the increase in wages as would be most important. But especially with Tone following the S&P, it would be fun. But I do think the next story goes hand in hand with yours, unless you guys have one last comment on yours, Jimmy.
Oh, I just go read the book. I myself ordered like 20 copies. I think they're at my house now, so I'm gonna start handing them out as gifts. I certainly want to hand them out to my students that already have Mastering Bitcoin by Antonopoulos. So.
Did you finish the whole book already?
Yeah, I read a first draft like 6 months ago when he was. I think I'm in the acknowledgements because I helped review it. But yeah, I read it again. It's better than the first draft, which I thought was really good.
Great. So, sorry, working off of one computer here. So moving into the next piece, which again brings up some interesting notes that I think again we can refer back to your comments here. So this was quite nuanced. Again, in the end of the day, right? This is just the economists taking, one prominent bank's research group's research. So it is an opinion piece. But what I did find good about the article was just, it was interesting that they really delved into what Barclays was thinking, so we can dissect that. And Barclays is identifying 4 major challenges in the crypto space. 1, trust. 2, sovereignty. 3, privacy for the blockchain. Tone, they talk about max value not being the same as fair value, citing that only 8% of Americans, right, who hold Bitcoin do so for purchases and payment. It's an often conversation we have. Do you believe that because of this, is this the main motive for buying cryptos becoming simply speculation?
I think buying cryptos for speculation becomes the motive when the price of Bitcoin starts to go up fairly quickly. So I guess the second half of 2017 was mostly speculation. And that's one of the reasons why we have gone all the way back down to like 6,000. And we're supposed to overshoot the point at which only speculative buyers came in. Now, also a bunch of long-term holders came in. Now, they're the economists like, look, there are reasons on top. There are four reasons that they gave in the beginning of the article. They're generally correct, and I'm saying generally, right? But what they're missing is they're basically explaining why Bitcoin is kind of useless for the first world, and it's only useful in times of economic stress. And I agree with that. And the events of Cyprus and Greece, which are first world countries, well, Greece is borderline, um, and um, and they talked about how in economic crisis, like what they had, Bitcoin becomes very useful. But without the economic crisis, it's not that useful. But what they don't distinguish is when the Greek or Cyprus event happens and you don't already have Bitcoin, you're kind of screwed. So they're like saying that, oh, nobody needs this until you do. But when you do, you don't have it. So because it's inevitable that your country is probably going to hit economic stress at some point in the future, you want to have Bitcoin now on reserve rather than later. And they're not really acknowledging that, which really bothered me in this article.
That's what bothered you? That's what bothered you?
Well,
For me, the thing that bothered me the most was that they don't, they're like, okay, this Bitcoin can't be some sort of like government issued currency. I mean, the four problems they point out are exactly why I use Bitcoin. It's trustless. You don't need to trust anybody. It's, sovereign, right? Like I'm sovereign over my own coins, not the government.
hey,
It's
can I comment on that? Can I comment on that?
Yeah.
This is an interesting one, right? Because I do agree with them. Like, what makes it a good like fiat currency and government currency is trust and not government. The reason why the U.S. dollar is still the U.S. Reserve, the world reserve currency, is because the U.S. government and the U.S. dollar are trusted above any other. So while you and I are comfortable in trusting a decentralized currency like Bitcoin, the average person doesn't yet, right? So you have to trust in the decentralization of Bitcoin in order to believe in Bitcoin. So it's a bit of a chicken and the egg situation here.
Jimmy, on that, right, they use a pretty strong term, if I can find it, about it being pretty much parasitic in the way that since they believe absolutely that the bubble has burst, that not that many newcomers are going to come into the market given just their fear that it's not going to go back up.
Yeah, I don't think they understand hodlers, right? Like this is exactly how people that are analyzing it without understanding the underlying stuff sort of do things. And they have a very different macroeconomic view of things. They think, sort of Keynesian in a Keynesian way. And so, of course, the challenges that they're talking about are all from their perspective. I think Keynesian economics has been completely debunked in every which way by real world experience over the last 50 years or even 100 years. So in many ways, I think this article is complete crap. And all of this analysis is complete crap. It doesn't understand, what makes Bitcoin work. And even the economic perspective that it comes from is complete bunk. So of course the analysis is going to be bunk. It's a lot like the critiques of Bitcoin from like Krugman or something like that. It doesn't make any sense because well, first of all, he's more a propagandist than an economist. Well, most economists are propagandists these days. But none of this analysis is going to really make sense if you sort of like believe these weird Keynesian axioms that have been proven to be wrong over and over again.
Tone, they're not saying that the price couldn't go back up. Yet again, they are saying that not that many people they think are going to adopt it. Do you want to respond to that in regards to Jimmy's latest comment?
Well, I mean, they're just guessing, right? Like, I'm expecting the price to go back up. I'm expecting people to adopt Bitcoin, but do I know for sure? I honestly don't. Like, I mean, I'm invested in the fact that this will happen, but to be honest, no one really knows. I'm expecting it to happen, but we'll see. And I did find their conclusion to be totally ridiculous. If you want to scroll down to that.
I'm going to scroll quickly then. Here we go. The crypto fever has broken.
Wherever that last paragraph was, like the last two paragraphs or something in the article.
The new buyers.
Yeah, I mean, they're saying blockchain, not Bitcoin, basically.
Yeah, that was the part. Like at the end of the article, like I'm like, because as I was reading the whole thing, I'm like, all right, at least it sounds like they understand Bitcoin, but they seem to just have wrong conclusions. But then I read that last paragraph and I'm like, nope, the author does not understand Bitcoin at all. Like it's and it made it clear in that conclusion. There was basically like, hey, but real estate on the blockchain would work. And I'm like, no, that's not what it's for.
Yeah, I did like that one example. All right, if you guys don't have last thoughts, then I do think this leads in nicely to venture capitalists also getting poor advice from, here we go. That doesn't make entire sense, especially because their advisors did not understand the environment at all. So venture capitalists seek safe harbor for virtual currencies. So again, this isn't news that, they've been lobbying the regulators, but what is newsworthy for me is that regulators are considering if they're going to call these things securities, right? So Levin is taking shots at other lawyers and advisors, and he's saying that either you guys don't have to hire any lawyers because, because you thought you were so smart, or you hired bad lawyers who gave you bad advice, and from that, it spawned the 2000 currencies. So I see this as, again, the insiders beginning to shoot at each other. Tone, do you think that the SEC may back off, given, and I'm going to be a little controversial here, that they've made the rulings and lobbyists have ways of paying enormous amounts of money to these regulators?
Yeah, I mean, look, there's only one. I mean, when it comes to this regulation of ICOs, the biggest thing is going to be, is Ethereum a security or isn't it, and why, right? Because 90% of every ICO is exactly like Ethereum. And clearly, this group of advisors to the SEC doesn't want Ethereum classified as a security, because if it happens that way, the whole house of cards goes down. So they're trying to come up with, it's kind of like the Ripple situation. Okay, so we did this thing, we can't take it back, so how do we bullshit our way into its existence, right? In the case of Ethereum, all right, we created this security, it was clearly a security, but now it's no longer a security because it's decentralized. Which is also kind of bullshit, because Vitalik clearly reversed transactions, right? Like, there's like holes everywhere. So the only thing that they can claim is, I would have made the argument Ethereum is now too big to fail if you call it a security. I'm waiting for that, right? And it's like, I don't know what to say, right? It's like, you can't say this was a security, but now it's a utility, right? Like
I think you could say, I told you so, Tone. I'm pretty sure you're the one person that can definitely say, I told you so.
I'll say it. I have multiple I told you so's, and they're all involving Ethereum. So when it implodes or when it becomes a security, I will gladly say I told you so. The problem happens if people like this, the VCs that probably have a lot of money, not only in Ethereum, but on the shit that's built on top of Ethereum, if they can get this passed, and it states it right in the article, they're like, well, if it was a security, but it has passed the stage of speculation, and it is now actually useful, then it should no longer be a security, which is a hilarious argument, right? Because then where does every other ICO stand? I mean, people will be like on their knees in front of the SEC, give us 3 more months and we will no longer be a security. Please, we will have utility in 3 months. Somebody will be using our product. Like, it's
To your point that too big to fail, right? Yeah. I see it as they're begging these regulators that the billions they've made, they've made it innocently, and if you do anything now, it's going to cause a lot of harm. Jimmy, to you, right? I do see this argument is that they're saying the horse is out of the barn. It's too late to do anything. So maybe on a going forward basis, we'll follow your guidelines. What are you thinking?
Well, first of all, I'm very conflicted about this story, because sort of the libertarian in me thinks like the SEC shouldn't be regulating things like this. But at the same time, I really think that they've got the analysis correct. It is a security, and from their perspective, they should be regulating it. And this was sort of like illegal. So I don't like that Ethereum is. I mean, that the SEC is sort of stepping up regulation, but I do like the fact that Ethereum is sort of getting exposed for the centralized thing that it is. I mean, they had a token sale, guys. Like most of their coins were created out of that token sale, and it's not really that different than any other sort of security. So I think that's pretty similar. That said, from the SEC standpoint, this is a very interesting play, because you could scare the bejesus out of everybody if your first scalp is Ethereum. You're pretty much going to, put a stop to this like worldwide very, very quickly. I mean, I'm hearing like on Twitter, oh, that's just going to move ICOs to different jurisdictions. That's not how it works when it's centralized. That works if it's decentralized, because other jurisdictions, you can't kill the beast with one fell swoop. These are all centralized things. So, like Vitalik can never step foot in the United States again, because he'll get, fined billions of dollars or something.
Well, not just the United States, probably any country with an extradition treaty, but the SEC doesn't really arrest people, right?
They don't arrest people, but they will find them, right? And if you have a foundation, if you have a central marketing arm, more or less, that has billions of dollars that it can spend towards the promotion of your coin, that's now suddenly in a lot of jeopardy, because that's who the SEC is going to find. They're going to say, okay, you owe us lots and lots of many millions of dollars, because this is security and whatever. And that will get very interesting once those foundations run out of money, because now the printing press will start to run a little more, and we'll see exactly how centralized these places are, because without the promotion of these centralized foundations, you start having trouble pumping the price now, and there's a domino effect that's ready once these foundations run out of money, and we'll see exactly what centralization does to anything that's considered something close to money.
Right. And
yeah, go ahead, Lee.
To your point about marketing, there's so many tentacles involved in this. The marketing firms that were hired that are external, not internal to these firms as well. It'll be interesting how many different firms, advisors, industries that were all involved in these scams are going to be hit. And again, I think what will be interesting is to find out just how many were actually naive, and the ones that were actually very smart, knew exactly what they were doing. We're looking at some of the top, law firms in the world, Cooley, Perkins Coie, right? And maybe they knew exactly what they were doing. And since they're law firms, they covered their butts. And therefore we're able to potentially wiggle out of this. Again, to note at the bottom, right? And I'll turn this to you, Tone, is that in the end of the day, Clayton, right, has said that almost every token issued through an ICO should be registered as security, although he came out, I think, a week ago saying that, again, but not all ICOs are frauds. So I do see some contradiction going on.
There's a lot of contradiction, not only there, but when I was listening to the Senate hearings, one of the senators basically told one of the lawyers said, hey, so the SEC should have jurisdiction over these ICOs. And then the senator goes, well, we got a report from the director of the SEC, Clayton, and he says that he doesn't have the authority to go after ICOs. Like, what do you say to that? Like, okay, you're being lazy in your job. Do you say that to the senator? Like, it's weird. And are you guys still getting me? I'm getting some like internet disruption notices.
No, you sound
we got you.
Okay, and I've been sitting on a lot of these ICO panels as I go through these conferences, and like we're not talking about technology, guys. Can we just like move this discussion back to reality? There's no innovation. There's no technology in ICOs. The only technology is solicitation of money from unqualified investors. That's the technology we're talking about here. And people are like, well, if the US government cracks it down, then they'll just move to other jurisdictions. Well, I'm pretty sure it's a lot easier to solicit money from unqualified investors in third world countries right now anyway, right? So go ahead, you can move there. Like, the point is to solicit money from rich people in first world countries. That's the goal. It doesn't really matter where you're doing it from. You're soliciting money from rich people. And it's amazing how they're all like, well, US people can't invest in this stuff. But that's where the money is. Like, you want them to buy it on the secondary market so they can still get rich by selling it to the third bag holder, and they become the second bag holder. Like, we'll see how it all ends. But look, if the other arguments that I always get, it's like, well, the dot-com crisis happened, and the real estate bubble happened. All of that was under the SEC's watch. All of that was under the regulators' watch, and it still blew up. I'm like, well, exactly. So obviously you want more of the same, and you want this bubble to get even more because you're not doing your responsibility of educating people not to invest a dime in any of this ICO garbage.
Right, absolutely. And I guess one last comment to you, Jimmy, I'll be controversial again, right? All of these firms listed are the firms that are representing Andreessen Horowitz and Union Square Ventures, and the emanate the billions of dollars of VC capital that they have made as cash infusions into these startups for the past couple of years. So they're definitely covering their butts, or attempting to. And therefore, kind of similar to the story that we recently covered of Coinbase's acquisitions, I wonder if this is their opportunity to also continue to let these startups that have not been doing very well in the blockchain space, potentially due to ignorance on their part of investing, potentially start making some more money, which a lot of them are completely flatlined and losing their runway.
Yeah, I mean, these guys are pros at this, right? Like, they've been investing for a long time, and they know how to work the system at least a little bit, and they certainly have LPs that are really, really rich. So it's not going to be very difficult for them to know how to pull the strings. I don't say this lightly. I think the era of like rich people having so much control over, who wins and who loses is slowly coming to an end with Bitcoin. And this is the dying gasps of the elite, just sort of like, trying to assert control over this stuff. I think we'll be back to, some sort of sound money that's going to make a lot of this stuff less attractive, in large part because you're not going to have government printed fiat money that's just available for very cheap to only really rich people. But that said, this is the behavior you expect from very rich people that know what they're doing, and we'll see how this ends up. But yeah, I don't really care what the U.S. government thinks of these things in particular. I mean, if it brings about the death of some of these ICOs and altcoins a little faster, then that's good. But I mean, yeah, I mean, I think inevitably Bitcoin wins anyway.
Right. And last comment on that, due to the centralization of these coins, then Thor's hammer of the SEC can actually come down. I do hope that they do it a bit more speedy than what they've been doing as they're dragging their feet versus some other countries like India that we've been covering, which at least the only positive I think of their current situation with the RBI is that they've actually been definitive on what they're saying can and cannot happen. I think we've been going a little slow. So unless you guys have final comments, move to the mempool.
If you want to scroll down just a tiny bit. Yeah, there you go. Once again, well, actually something happened at around 4 a.m. Huh? There's a ton of transactions that went in, but most of them got cleared in the last like 30 minutes or so. You should still be able to get stuff in for 2, 3, 4 Satoshi per byte. You could probably get it in even less for even less if you wanted to. If you need it in the next block, I think somewhere between 5 and 10 should do. But yeah, it's plenty of block space out there. It's amazing what happens when the companies that are using this block space actually optimize their code.
Yeah. Thank you, Jimmy, for the weather report. Tone, we hit 8,500. People got a little excited, although I think still intermediate bearish. What's going on?
Yeah, I am still, well, okay, so let's take a look at the charts. Let's be objective about it and see what happens. I'm working with one monitor today, so.
Your screen share.
I'm on screen share, perfect. So here's my weekly chart. We're right at the trend line. So the good news for the bulls is, according to this indicator, we have a 2 that is trading just above the 1. Now, my only caution signal here is this has happened before. It happened about a month and a half ago, where we had the candle of the week of March 3rd trading just above the candle of the week of February 26th on a weekly scale just above this current trend line. So can we break out from here? Of course we could, but I would still remain cautious on those bullish trades. The situation is now slowly turning into neutral, but again, I don't trust this trend line breaking until it actually does. So I am still being very cautious. Again, this is trading. This isn't holding, right? Like, I'm still holding all of my Bitcoin. It's amazing how many people are all over Twitter saying that I shorted at 6,000 and now I have to get out of my short positions. Guys, I don't even trade. And how many times did I say I don't short? So like, I am still holding Bitcoin. Like, if Bitcoin goes to 20,000 tomorrow, I'll be the happiest person in the world with my position. So you have to separate holding from trading. If I'm trading this thing, there's no way I'm entering a bullish position here. I'd rather enter my bullish position like somewhere at like 10 or 11,000 when I have a higher probability chance of being absolutely right on that trade. But at these levels, if you're a holder of Bitcoin, you should be happy. As a trader of Bitcoin, I would still remain cautious. I mean, we're still in a bear market. We're still in a downtrend. This is most likely a counter trend rally. Can this turn into a breakout to new all-time highs? Yes, it could. I will look to, I guess, figuratively buy on a bullish trade after a pullback. So I will wait for the pullback. If the pullback never comes, then that means I'm not trading this asset, right? Like people have to understand that you don't have to be in every trade. For example, like if you don't have a trade on Amazon, you don't just randomly buy. You wait for a buying opportunity. And if Amazon goes up for 2 years and you don't have an actual trade on Amazon that you're absolutely positive about, then you don't trade Amazon. You go and trade another stock, right? Hopefully you are holding Amazon as a long-term play in the background. But long-term plays and trades are different things. And a lot of people don't understand that. So probably this is a window discussion for trading Bitcoin, not the morning brief. But We are on a 2 trading above the 1. Those that are trading this indicator, yes, that's a bot would be long right here. Me as a human, I would not be long right here. This is what separates bot trading from human trading. And I would still be cautious of this trend line reversing the price any minute. So I would still be cautious on that. Here is a zoomed in look. Again, we had a 9, and I expected this 9 to give something a little more than a 1 to 2 candle correction. I expected it to at least go back to the bottom trend line. I had also said that once the price of Bitcoin goes above the 50-day moving average and above this blue line, which is the prior swing high, and above the trend line, it starts to set up, a nice bullish breakout out of this symmetric triangle, which is like quasi-hacked because one line is drawn based on log scale and the other line is drawn based on linear scale. But nevertheless, sure, this could be a breakout. However, I would wait for a probabilistic buying opportunity. So it doesn't matter how high it goes from here. It can go into the 128-day versus 200-day depth cross, okay? And then I would look for a pullback. If this pullback takes me back down to the $8,000 area and starts to reverse, then I'm going to be confident in potential reversal of the bearish trend. But for now, even though I saw this market as bearish, it broke the other way. Your risk management is what saves you here as a trader, and now I see this market as overextended. So I would not have been long here because I was bearish, and I would not be long here because it's overextended. I mean, that's trading, okay? I would stay away. I would stay away from trading, and I would wait for an actual, probabilistic trade in my favor. Now, you don't have to do that. You traders can trade all day, every day. That's up to you guys, right? But to me, this has gone from bearish to overextended, right? Because it's breaking above a lot of resistance points. If it can break above these resistance points and then pull back and use them as support, that would be great. I mean, I remember recent events, right? Look, we pulled right into the moving average and went down. This one I expected. This one worked out exactly right. This was a trickier situation in that we broke so many resistance points, and then we just didn't have any more momentum, and we went down and made a new low on a closing basis. So I am still very cautious on any bullish trades. Zooming in on a 4-hour, this 9 got ignored. So if you are trading this indicator like a robot, you would enter as a 2 broke above a 1, which it kind of didn't, but a 3 broke above a 2, broke above the 9. That's pretty much your bull trade on a 4-hour time frame, and you would look to take your profits when it gets to a 9. I mean, that's pretty much sequential trading. Same thing could have been done here. Now you missed the price flip, but you enter on a 4 above a 3 and you take your profits on a 9. Again, if you're mechanically trading just this indicator. Let's take a look at the 12-hour chart. And the 12-hour chart is breaking out as well. The 12-hour chart is on a 6. Again, I would look for a 9. It could come in combination with a 200 period moving average on the 12-hour. Could be in the vicinity of 800, 8,750 or 8,800, somewhere in that vicinity. And I would like to see, it hold support on a pullback. So to me, it can reverse any day. So I would not risk bullish positions here as a trader. But as a holder, you should have been in yesterday, right? That's my answer. When people ask me, when should I buy Bitcoin? My answer is always yesterday. So there you go. What is this? Same chart. Let me go to the 1 hour. Probably nothing useful there. Usually isn't. And there isn't. We're on a price flip in the middle of a count. So that's pretty much it for the trading positions for me. And back to you guys.
All right. Well, everybody, thank you so much for watching. Have a great weekend. Happy Friday. You can find this later on the World Crypto Network's iTunes podcast. Jimmy?
This song is done.
And Tone.
Bye, guys. Good luck trading.
Have a great day, everybody.